Central banks around the world have tried just about everything to drag their economies out of recession. Now they have one weapon left in their armoury: currency depreciation. Joining me down the line to discuss the potential FX implication and today's targets in focus is Nick Stamenkovic from Ria Capital Markets. So Nick, do you think this so-called currency war is about to break out? If so, what is the likelihood investors will be able to make a profit out of gauging which devaluation strategy will work the most effectively?
I don't think there's any evidence of currency wars across the board, but there's certainly some evidence in certain regions of the world. Certainly, if you look at the UK, for instance, the Bank of England seems to be quite happy to allow the currency to fall to support exports, and you've seen evidence of that in some other regions of the world as well. Obviously, over the medium term, there has been concern among some of the EM countries, particularly Latin American countries, that the American authorities allowed the US dollar to go on a significant downtrend, to cushion the downturn there that they went through a few years ago. I don't think we're seeing currency depreciation as a major theme yet, but clearly it's a risk because we are getting towards the limits of monetary policy in terms of both interest rates and QE. And clearly, after very strong performance in emerging markets last year and in corporate bond markets, investors probably have to look at currencies more closely than they did last year to generate decent returns.
The non-EU trade balance in Italy showed a widened surplus in December. Meanwhile, France released its business climate figure, falling from 89 to 86 in January. The data disappointed the more optimistic consensus view of a rise to 90. But what is your outlook for the euro against the dollar in the short, mid and longer term?
Well, certainly the economic picture in Europe is still poor. Undoubtedly, the economy remained in recession at the end of last year. But some of the forward-looking indicators do suggest that the European economy should stabilise in the early part of 2013. And I'm envisaging a gradual recovery through the second half of the year, similar to the ECB. The key factor that has driven the euro-dollar higher, and I expect to remain a supportive factor, is the easing of tail risks in the euro area. Following Mr. Draghi's comments last year that he'd do anything to support the euro system, and then following up with the introduction of the announcement of outright monetary transactions, we've seen a significant improvement in sentiments towards peripherals, and I think that will persist a little bit further, although yields have clearly fallen quite sharply both in Spain and Italy, and that will be a supportive factor to euro going forward. On the other side, I think the dollar will continue to struggle in an environment where risk appetite improves and the Fed continues to pursue a policy of QE. So consequently, I think the euro dollar will hold its own near term, and we should see a modest upturn through the course of this year. But I don't think the euro dollar will go through 140.
Abe has not been able to ignore the market's disappointment in the Japanese government's ineffective efforts regarding its currency, as the dollar-yen continued to move south, even breaching the support level of 88.4. I understand you expect this pair to reach 92 by year-end though, but what are your main reasons for this?
Well, clearly the latest BOJ meeting was a bit of a disappointment. The market had been primed for an aggressive expansion of monetary policy by the BOJ. They did signal an increase in the inflation target for 1 to 2%, but the most disappointing aspect was they delayed any open market asset purchases to next year. So for now, I think the yen's probably going to stabilise around the 88 level. Going forward, I think it really depends what happens when Mr. Shirakawa, BOJ governor, steps down in April, and we see two of the deputy governors stepping down as well. Mr. Abe has made it quite clear he wants to see some more radical members coming in, and I'm expecting that they will pursue a more radical stance. They'll be determined with the government to get rid of deflation once and for all, and hence I think the yen will come under a bit more downward pressure. But I don't think it's going to be as aggressive a sell-off as we've seen recently, but I do think the yen will continue to soften during the course of this year, even against the dollar.
The euro-pound moved higher as UK Prime Minister David Cameron spoke about UK-EU relations and price and expectations ahead of the UK jobless claims. How far-reaching do you think the implications of Cameron's speech really are, and what will be the main drivers affecting the euro-pound moving forward?
Well, certainly there was a lot of fear that Mr. Cameron's comments might be more radical in the sense that he would even announce a referendum to leave the euro area. But it looks like he's still committed to the EU, but he wants to leave it up to the British public to make up their mind, assuming the Conservative Party wins the next election. So I think in the end it wasn't as damaging as it could have been, and hence I think they gave a little bit of support to the pound. On top of that, the labour market data was reassuring today. The economy is still bouncing on the bottom, but the labour market is incredibly resilient, as you saw from falling unemployment. So that's a bit of an upward surprise to the pound. Going forward, I think the pound will weaken a little bit further against the euro. I think the UK economy is in difficulty. We have a very weak economy. We have a new banking and governor starting in the summer. He could pursue a more radical stance. On top of that, the fiscal picture looks pretty poor here, and I think sterling slowly but surely starts to lose its safe haven status. So even though we've seen a quite sharp fall in the pound against the euro at the early part of this year, we might see a bit of stability near term, but I think over the medium term, the pound will continue to lose ground against the euro.
Nick, thank you for your perspectives once again. Well, that's all from me at the moment, but click back to Dukascopy TV for today's news bulletin, touching on the day's biggest headlines. Bye for now.